Thursday, September 9th, 2021, Monaco 64, home of alternative economics and contrarian views. There's a lot of talk about tapering out there. They're wheeling out a lot of Fed officials, especially Bullard from the St. Louis Fed. Years ago, he was a mega dove. Now he's a mega hawk. I think he's just a PR guy, to be honest. But we're going to look today, and you might be surprised and confused, but if you've been listening to me for many years, you understand the difference between rising prices and inflation. And I want to talk about how tapering actually could have a dual impact, not only tapering, but rising yields for treasuries, for bonds, for loans, for mortgages. Dual impact. And by that I mean we could see a deflationary impact on asset prices. It could be the end of the 40-year of rising asset prices that we've had. We've had massive inflation for the last 40 years. When Ronald Reagan was inaugurated, after all, the national debt in the US was less than $1 trillion, and now we're approaching 30 trillion. And we all know, or most of us know, that increasing debt burden in a fiat currency system is the other side of currency going up as well in quantity. The currency should lose value versus all kinds of things. It has lost a lot of value versus everything, but especially asset prices. And that's why you have so much inequality as well. The very wealthy have gotten very wealthy, even more wealthy since last year. Back in the early 80s when Reagan took over, the term billionaire was very rare. There's very few, maybe 1 or 2 billionaires, or if even. Nowadays, it's more like the millionaires used to be. So we've added 3 zeros. That's the inflation. And they've kind of hidden the consumer price rises. They've doctored with it. They've boiled people like the frog in the pot, slowly and slowly, 2, 3, 4% a year inflation, CPI, and people think that that's not a bad thing because it's not getting up to 5 or 10%. But I would say even 1 and 2% price rises for the consumer will really decimate the standard of living for the general public. So this talk about deflation and inflation is very confusing, I do admit. So before I tell you what I think will happen if they start tapering and yields go up, we just need to understand that inflation is the increase in the money supply, not backed by convertible money or gold and silver. It's when you create money out of thin air in a fiat currency system. That's inflation. And it can result in rising prices of anything. And during that inflation, you could have prices dropping of certain things. It's not necessarily everything. And deflation, of course, would be the opposite, would be the shrinking of the debt, the collapse of the debt, the paying off of the debt. And that can result into lower prices of anything. But I think if they do the tapering and they start raising rates, we're going to see asset prices really drop sharply. And the other thing that people forget, when you have rising rates, the price of servicing debt, credit goes up. So already we know that there's a lot of shortages of everything. I talked to you yesterday about the video about the trucking insider. about what's going on. We know that there's a shortage of chips from Southeast Asia for electronics. We know there's a shortage of automobiles in the US. Everywhere around the world, there's a shortage of labor. So I think the tapering and the rising interest rates will be even worse for those shortages, because a lot of businesses will go under because they won't be able to service their debt. Yes, that is deflationary. That will be very deflationary for the billionaire class, I would say. And it would shrink the supply of things even more. And I think you could see consumer prices, commodities, real things, tangibles, be in high demand. And that might seem not to make sense, but it does, because as I said, we've had 40 years of this move into paper assets, stocks, bonds, private equity, whatever you want to call it, while commodities are still historically very low. So we could also see investors rushing away, especially the big money rushing away into hard assets and tangibles. And they have already been doing that for the last few years. And you have to understand that all the phony wealth that has been created on the paper side is humongous. It's like the Niagara Falls trying to get into a hose. That's what the commodity market is. So even if the economy is moribund, even if demand is low, I can expect to see the consumer get hurt even more. Of course, the billionaires will do okay, but I think a lot of billionaires will find out that they might be just millionaires, maybe not even. So, yes, bring it on, Federal Reserve, even though I think they're just talking, doing a lot of talking. The Federal Reserve, that's what they do best, talk. They never act. And if they do act, they act for a little while and then they just reverse everything. So that's why I think we could have continued rising consumer prices, and the Federal Reserve, I think they're really cornered, because even if they start tapering and raising interest rates, consumer prices are not going to stop going up. And that's what people understand as being inflation. That will be really confusing, that you could have rising prices while actually on the other side, on the asset side, even on the money supply side, you'd have deflation. But I don't think this deflation of the money supply will happen. The Federal Reserve will not let it happen. They haven't let it happen since, well, the early 30s, when they took the United States off the gold standard domestically. The other thing I want to say today is that, especially in the UK, but also on the continent, in the EU, we're going to have a very harsh winter. And it's not because of that health problem. It's more because of energy. We're very dependent on natural gas, and natural gas prices are going through the roof. I know it's quite hot right now this summer. The end of the summer is quite hot, but very soon it's going to get colder. And I think people need to tighten their belts. Think about tightening your belts. I usually don't tell people about tightening their belts, but put a little bit of savings aside if you can, even in fiat currency, for higher energy bills. I think they're going to get a lot higher, and everything is going to get higher in prices, all the consumer goods. I see no end to the continued rising prices. We're getting the Cantillon effect in spades now. We've had 40 years of inflation. Yes, it's been flowing mostly to the very wealthy through asset prices. But I think, unfortunately, this is going to start flowing now into everyday goods, services, even wages, and that might seem a good thing for the general public, those who earn wages. But I think, unfortunately, all the costs are going to go up faster than wages. Maybe not for some. So with that, let's quickly look at where the markets are this morning. It's 8:41 a.m. London time. We've got spot gold at 1791.50. It's up just over $2. It's been a very narrow range overnight, 1792 to 1786. Silver's up 4 cents, trading at 23.97, so just below 24. Range has been 24.01 to 23.83. The Dow future is down 193 points, just over 0.5%. The Nasdaq is down 54, about a third, and the S&P future is down 22 points. The FTSE testing the 7,000 level. It's down 87 or 1.24%. Now to the currencies, the fiat currencies, of course, a Forex report, so to speak. Sterling is up slightly at 137.77. The euro is up 0.1% at 118.26. The dollar is down a third of a percent versus the yen at 109.91. A dollar is up slightly versus the yuan at 645.89. The Aussie dollar is unchanged versus the dollar at 73.67. The dollar is up 0.25% versus the Canadian dollar at 127.23. And the Kiwi dollar is up slightly at 71.02. WTI crude is down 0.4% at 68.85. High-grade copper is up 1% at 4.51. Natural gas, as I said, is motoring ahead. I'm going to show you a chart of natural gas here. And yeah, this is the highest level we've seen. Let me tell you since when. In 7 years, we've broken the high from November 2018. Yes, that's how bad it's getting, I think. It's not going to get better. That chart, unfortunately, looks very bullish. So this morning, natural gas is up 0.5%, and it's at $4.9450, almost at $5. The 10-year yield, to finish off, is at 132, down about 2 basis points. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.